Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A second bullish white soldier yesterday, and a significant follow-on higher to the previous session's reactionary bullish long white Mariposa. The market seems now to be moving away from its stabilization phase and more fully into its pullback phase after breaking the now retired recent mid-February to end of March bearish Andrews pitchfork. Prices broke up and closed over the next cap on the market yesterday. That's the middle time, currently 107.04 of the well-highlighted January to May 2021 bearish Andrews pitchfork. This pitchfork continues to direct and show the overall bearish angle of attack of this market, as it has done now for over a year. We also saw the market push up and close over the April 2020 low at 107.25. However, I suspect the market halt there was more influenced by the descending short-medium moving average, currently 107.76, that has descended into the frame of reference for this market. Meanwhile, below, well, we have support from the 2020 low at 106.35, but the better support starts from the April 2017 low at 105.68 and extends lower thereafter. So far today, a move back down below the April 2020 low and the middle time and testing yesterday's low. Thus, it could be seen as a bearish engulfing pattern right now, if only just. Cable, aka sterling against the US dollar. A reactionary bearish harami yesterday, and what looks like it might have been an attempted bearish double, outside day and possible pipe top, though that last one will have to wait a day or so to see if it has come about. The market dipped back down into the congestion zone between 124.78 to 125.09, which contains within it the 38.2% Fibonacci line of the March 2020 to June 2021 move at 124.89. However, the market failed to close down within it. Thus, it still can be seen as support. We're still in a fairly free area, with only the high from 3 weeks ago in the 126.35 area as any form of resistance until the September 2020 low at 126.72. So far today, well, another dip down to the support from the congestion zone between 124.78 and 125.09. But it's sort of held fast at the moment, and prices have pulled back around towards yesterday's close and then back down again. Euro sterling. A bullish long white Mariposa and second bullish white soldier yesterday. It was also an impressive follow-on higher to the previous session's combined immediate countering key reversal up and bullish double pattern. This was a continuation of the strong move higher up and away from the support below of the long moving average, currently at 84.43, the upper trend line, currently at 84.19, as of the smaller, more robust lopsided diamond pattern, the April 2021 low at 84.70, and finally, the broken September 2021 to date downtrend, currently at 84.69, that makes up the upper trend line of the extended diamond pattern. Thus, on the upside, we have, for the smaller lopsided diamond pattern, a primary target X in the 86.80 area and a harder secondary target X1 in the 87.65 area. For the extended diamond pattern, we have a primary target X2 in the 87.15 area and a harder secondary target X3 in the 88 even area. Additionally, there is also one final pattern, and it is the big one, which this market had previously triggered but then sent mixed messages on. I've spoken for weeks, months even, of the very large falling wedge pattern, currently 84.70 to 81.62. This pattern is still in operation, but has fallen into the shadows a little with the rising prominence of the diamond patterns. Though triggered, the pattern still leaves us with questions. You see, it has the most ambitious upside target of all. Target X5 for this pattern is in the 88.65 area, and that is a really big ask. So far today, well, a reactionary move lower, a substantial one, and looking right now like a possible bearish dark cloud cover pattern. US dollar against the Indian rupee. An inverted hammer pattern yesterday and a second bearish black crow, though it was once again well within the new congestion zone between 77.40 and 77.80. Now, a quick word on inverted hammer patterns. They are traditionally seen as a bullish reversal pattern. However, in just under 7 out of 10 times, they act as bearish continuation patterns. Thus, it will be interesting to see if the market follows tradition or the data. Overall, prices are still in between the lower time below, currently 77.01, and the middle time above, currently 78.47, with the mid-January to early April bullish Andrews pitchfork. We also still have our overhead target X in the 78.30 area. This is the potential target for the whole of the 2022 action, being a possible bullish halfway hesitation. In between there and here, we have the previously mentioned middle time and also the upper trend line, currently 78.24, of the late August to date ascending expanding wedge pattern. So far today, a slightly reactionary move back up right now, but really nothing much. Originally looking like a possible bullish double, right, but it's moving to a little bit higher than that at the moment. US dollar against the Brazilian real. An indecisive spinning top yesterday, thus halting, if not ending, a move lower of nearly 2 weeks in duration. What was most interesting about yesterday's action was how the top and bottom of the range were encapsulated by the 250% Fibonacci lines of the June 2019 to May 2020 move at 484.26 on top, and the October 2018 to May 2020 move at 477.54 below. Additionally, the market closed for a second session around the June 2020 low at 481.62. Overhead, we now have the declining short-medium moving average, currently 487.63 as the next resistance. It is just in front of the 2021 low at 489.08. Meanwhile, below, we have limited support until the congestion in the 472.90 area with a little more at 471.42. In a bigger picture, we're still between the upper time, currently 511.01, and the middle time, currently 464.92, of the start of 2022 to date bearish Andrews pitchfork. This is an early bearish pitchfork, but it may have some merit in forming and hence showing the recent bearish angle of attack. US dollar against the Mexican peso. An insecure pattern yesterday. You see on the surface, it is a second consecutive indecisive pattern, an indecisive spinning top this time. However, it can also be seen as a bearish harami as well, which is not that hard a thing to construct as the previous session was an indecisive doji cross. Anyway, the recent top of the market is still defined by the lower trend line, uptrend if you will, of the June to October 2021 descending triangle pattern, and that's currently at 20.0608, with the descending short-medium moving average currently 20.1482, moving down towards that. Meanwhile, the base has the attrition evidence by the market moving down through the late March and April-based double bottom congestion between 2010 down to the 1971.68 area. I have recently asked the question, is the mid-April to date action a possible cat's ears pattern? Well, I think this pattern has merit, and I've been minded to place a, let's say, conservative target X below. Though if the move down should happen, it will probably extend further than that, as it is a bit of a lopsided pattern. I've used the minimum size possible for this pattern, thus target X is in the 1954 area. So far today, well, a test higher, though not by much, and interestingly, still within yesterday and Friday's range, just about. Thank you for listening. This short version broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimers posted with this broadcast. Copyright Tofpik and ADM Investor Services International Limited. Here comes the final bit.